Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, first things first, Happy New Year everyone. I wish you all a very prosperous 2024 and I hope you've enjoyed Christmas and New Year celebrations as much as I have. Okay, kicking off the new year with Bitcoin. It's been a while since I've updated the YouTube channel, I know. I've explained my life circumstances several times and they have not changed and won't for the foreseeable future, at least for a few months. Eventually I will get a bit more free time in the afternoons when my little boy starts nursery, but that won't be later till this year, and it will build up slowly one day at a time until he's used to it. But until then I'm still on a very tight schedule, only able to find the occasional hour, so this is one of those occasions. So we're going to take the opportunity to update our Bitcoin count. We're going to look at the long term, we're going to look at the short term, we're going to zoom in on the recent price action a little bit later and dig through both bullish and bearish ideas. But before I do all of that, I just want to start with a very basic look at the long term. Turn off the long term anyway, can't hear the long term 4-year cycle that we hear so much about in the Bitcoin space. And I put it onto this chart here so you can all see it, and I've accompanied it with something called crypto seasons. I've seen a few people use this as well, and I think it's a perfectly adequate description of the 4-year period that we go through in this market, or at least appear to go through in this market. So without further ado, let's start with that. Okay, so here is that 4-year cycle I was talking about. So this is from bottom to bottom, not top to top, but bottom to bottom. So we have the 2015 bear market, which was still the longest one we've been through currently, and that was a very serious decline of around 90%, and that bottomed in January 2015. Then we've got the 2017 through 18 bear market that bottomed in December 18, and then we've recently completed the November 21 into November 22 year-long bear market, which bottomed in October, or October-November 22. As you can see, let's just have a quick look at the length of these in time. The bull markets, excuse me. The price movements, corrective form, here we are, correction length. So we've got a 413-day correction, a 364-day correction, and a 378-day correction, roughly a year. Now, we start by essentially thinking of this bear market, this year-long downward move, as winter in our seasons, so to speak. So let's zoom back up here and put on these crypto seasons, and all I've done is just blocked out the price action, essentially with a little coloured box associated with the early part of the cycle, what we call the spring, sideways and initial upward movement followed by a relatively deep correction. We saw it into 2020 here, we've seen it in prior springs as well. We have not had a particularly deep correction yet, so there's an argument as to whether we're still in the spring period or whether we have now transitioned into summer. For the moment, given the time period of 4 years that we have to get through before the next low, which the cycle suggests is due in November 26, you know, we've got to get a move on, really, if we're going to go through all the summer, autumn, to peak out and then have a year-long winter at least. Now, although I have put this on the chart, I don't subscribe to it fully. I'm still an Elliottician at heart, and I believe that we're transitioning to a series of larger wave 4s. We're in a wave 3, and we will complete both cyclical, primary cyclical and super cycle waves over the next decade or two. And I would suspect that those wave 4s may take on a very different attitude, approach and experience to what we've previously been through. So let me just show you what I mean. Turn off those corrective lengths and seasons for a moment, and let's have a look at the corrective form. All of the major corrections we've witnessed in each of our bear markets thus far have been sharp corrections with no new price extreme above the prior high. So if we've gone through sharp 1 2 1 2 1 2, which is what my primary count is, we will be transitioning into 3 4 3 4 3 4, likely overlapping each other and perhaps taking different corrective forms to these sharp corrections, maybe sideways corrections, such as what we call a triangle, what people would call a pennant, sideways complex corrections, or just flat corrections, ABCs, 3, 3, 5s. These are all possibilities, but we're still a long way off getting into those waves yet, those corrective waves. I don't think we will encounter the next one until at least a year out from the bottom, expected bottom in November 26. So we want to be on guard around September, October 25. Obviously that's going to be subject to price action. We're going to be looking at the divergences, if any, building up on weekly and monthly time frames in the RSI and the MACD, and we're going to be anticipating the arrival of the peak and what we would essentially refer to as the autumn period before we go into winter. And I just wanted to get you familiar with this idea, just because it's going to be very easy with the whipsawing movements of ups and downs and pullbacks to get panicky and to get concerned about the idea of, oh, is at the top, is at the new all-time high, we're going to roll over from here. If we're following the primary count of now being in a primary free, of a cycle free, of a super cycle free, with multiple wave fours at larger degrees to correct in the coming decade or so, then we really do have to have a long-term view and the patience about it, because it's going to get easy to get shaken out and get worried if we're thinking about the gains and we're thinking about the time frame. So if we can just start by saying, look, we're only just getting going. We're just getting going. We're not even at all-time highs yet. We've got that to break through, and then we've got a whole period of gains beyond that, and then we've got a whole topping out process to go through, and that's at least, in my opinion, a couple of years in the making before we have to worry about getting out, okay, and anticipating that next crypto winter. So there you go. We've taken a chance to look at the crypto cycle, this 4-year period. As you can see, the little cycle waves at the bottom. These little cyclical, I'm not sure what the actual term is, but either way, they're based off of a 4-year time period of bottom to bottom. So now let's come in and look at the primary count, bullish and bearish options. Okay, so as I mentioned before, cycle wave 2, super cycle wave 2, cycle wave 2, primary wave 2, now transitioning into a primary wave 3 of 3 of 3. So we're looking at often all-time highs and beyond over the next few years. So that's what I anticipate. That's my bullish count. That's my primary, and it has been for the longest time, as anyone who's been following this channel will tell you. So far, I believe that we have completed a minor wave 1. This could be intermediate wave 1, into intermediate wave or minor wave 2. I've labelled it as minor 2 here, anticipating everything to start getting more and more stretched out like an accordion as we enter this third of a third of a third. So we'll see what happens. It could be 1, 2, 3, 4, 5 into 1, into a much deeper, longer winded 2, and then up into the 3. But we'll leave it as minor at the moment. On my shorter term counts, I've got it as intermediate. I will finally make up my mind once we've got more price action. But I believe that first initial wave 2, at whatever degree, minor or intermediate, is now complete, and we're transitioning to a wave 3. I'm still expecting a minute wave 1 to come in. It's possible that it's in and this is an ABC flat that's going to play out with a new price extreme, or it's possible that it's not in yet, it needs to come a little higher. We're going to talk about that on the smaller time frame in a moment. I'm just going to add this to the chart and move this up here. Now don't worry about where all these numbers are. These are not targets. This is just me shifting the count out of the way. So don't look at the numbers on the right and freak out saying Tom's expecting such and such to happen. I'm just pushing them out of the way so I can add them to the count when I think they're complete. Okay, so that's the bullish count. We're transitioning to a 3 of a 3 of a 3 of a 3. It's extremely bullish. There's no doubt about that in terms of the interpretation. So let's now have a look at the bearish interpretation. So the best I can come up with here is that when we were first looking at this 5-wave move up, we thought it might be a completed flat pattern with a 3, 3 and a 5, and I felt that, given that it was coming straight back into prior resistance, okay, straight back into prior support resistance, it was a sufficient retracement in terms of Fibonacci retracement from the high for it to be a B wave or an X wave correction, and it elicited some well, relatively good relationship between the waves, the 3 for 3 and the 5, but after it got past this point, let me just show you my little drawing tool. After it got past this point here, which would have been a really nice looking flat to expect it to go lower, it started to look a little overextended. Since then, the idea of that being any sort of C wave, I think, is utterly ridiculous, and is definitely not the case. Okay, so I've relabeled it as a multitude of zigzags. Okay, and we're going to get a corrective zigzag for our X. So this is a greater W, X and Y made up of a complex triple free, a triple zigzag, a TZZ here, and this could be a double or a TZZ or a simple zigzag itself. It's fine. It's perfectly acceptable to label a complex zigzag a W. Right? For some strange reason, some people seem to get upset with the idea. You can try and label this 1, 2, 3, 4, 5. I've never been able to dig out an impulse in this section or a diagonal or any way to complete this move to the low as a motive structure, so I've never been able to label it 1, 2, 3, 4, 5. For me, it still breaks down as a series of zigzags. Okay, no diagonal structure or expanding diagonal structure here, so it looks like a series of complex zigzags, which is why I prefer the bullish count of it being another sharp correction 1 into 2, and this being 1 into 2 and going further. But if we are going to be bearish, that's how I would look at it, and then I would look at this as a simple zigzag for an X wave. It keeps getting longer and it keeps pushing higher, but it will top out sooner or later and we will get a pullback. Right now, whether that pullback comes back and then progresses again into another wave 2 at a smaller degree in our bullish count, or we start to come down, make a lower high and collapse down into another ABC to complete the Y wave. Now, if it is bearish, we've still got all of those same long-term targets down here in the golden zone. In log, we've got target fibs down here based off the current low to swing high to swing low, 1 to 1 crossing straight over the golden zone, crossing straight over the 89% Fibonacci linear retracement, all here in the 10,277 10,000 region. Right, perfectly acceptable to come back down here in 3. Now, this happens to be one of the accounts a friend of mine who I get on very well with happens to believe is going on, and secretly, although I'm a bull, I hope he's right, to be honest, because who's going to turn their nose up at the opportunity to buy Bitcoin below 10 grand? Right, time to pick a few coins then. Time to pick up a few more coins if that happens, methinks. But I feel that I've missed that boat. I don't think we're going to get another opportunity, and I think my last buying opportunity that I participated in was around the current lows. So that's the bullish and that's the bearish count on the long term. Now let's do some fundamental analysis before we move on. I said fundamental in my haste, didn't I? I meant classical analysis. So let's turn off the Elliott wave bits and bobs we got going on here. Support targets, we don't need that. And let's just have a look at our moving averages, and let's bring up our RSI, okay, and MACD and our OBV. So currently we have the price action trading above the 10, 20 and 60 weekly exponential moving averages, all pointing upwards, all above their respective counterparts, all above the 250 weekly exponential moving average, which is now finally having flattened out, dipped down, is now once again starting to accelerate and rise to the upside. However, in the short term, we are very overbought on the weekly time frame, back up at around the 88-89 region, and we are showing, although we don't have a current high yet on the BLX, we now do on the shorter time frame chart. We have made new highs, so there is bearish divergence between the prior high and current price. It is not itself bearish divergence until we get a pivot form and get confirmation of that high, but it is a sign of weakness, a sign of us losing some momentum. Now, it could just be a case that we spent some time consolidating and we will now push even higher in the RSI and accelerate, getting rid of any divergence. In the case of our momentum indicators in the MACD here, we would expect the same to occur to support that, although we can see that we've got darker green bars here and the signal line and average lines are just starting to soften out a little bit, suggesting that we are losing a bit of momentum. Now, once again, could have just been consolidation before moving higher, could be a sign of us starting to top out. So we have to be a little bit cautious. OBV broke out of this long-term consolidation pattern after breaking to the downside, breaking to the upside. Some form of back test perhaps, or consolidation might be on the cards, but we can't bank on that. We need to see a pivot form and get an idea of if or not we're going to go lower. So that's how things look on the weekly time frame. We can see on the long term that RSI has suggested that we have once again bottomed in extreme conditions for our bear market and are now moving up into a new bull market. Now let's come over to the day time frame, have a look at this over here. So the consolidation on the day time frame in the RSI back to neutral territory with the divergence into these highs suggests that we may have just been a consolidation, and we can see that there is a kind of pennanty shape. Now we know on the shorter term price action, by the time you're watching this, we've already broken out of this so-called pennant shape, so we have got those new highs. Okay, we'll see what happens here. Do we push back up strongly into overbought conditions on the daily time frame? Same with the MACD. Do we get that average cross over the signal, push higher? Something we need to keep an eye on. So essentially that's how I'm looking at things from a classical analysis point of view. We're getting a little overbought, we have been consolidating, we may be topping out, but for the meantime we've broken out of what looks like a consolidatory structure and are pushing higher. So we need a bit more information first. So let's now move over to our other chart and see what we're making of this on the day time frame with a little bit more detail. So let's just shift this into log and let's bring up our primary count. Let's bring up our bullish count prior to that. Now this section here, how you have filled in with a couple of options, and we're going to talk about that in a minute, but first we're just going to bring up the same momentum indicators that we've got on our BLX. Now high into high on the MACD, we saw higher highs, we saw significant weakness on the RSI, right, from this high to this high to this high, and we have now seen a triple divergence, quadruple divergence occur now, but this is not divergence between a prior high and a current high, it is simply divergence between a prior high and current price. If this continues to march violently higher, it could undo this divergence and push back into overbought territory. We did not get oversold conditions on the daily time frame, we came back to neutral and we meandered sideways in what looks like a pennant structure. How violent this turns out to be a break to the outside, we will see probably in the next day or so with the closing volume and how strong this move continues to grow. Whether or not we're going to push much higher or whether we're going to wane and roll over, that will become clearer in the next few hours and days. For the meantime, we've broken out to another high and we have some push from volume on the daily time frame supporting this candle. Now obviously we're not done yet. This is today's candle. The volume has built up over the last few days. It is currently supporting this push higher, but it is not particularly strong yet, so we'll have to wait and see. So let's now come down to the 4-hour time frame and consider the possibilities of our various counts here. So on this time frame we can see that they've labelled this intermediate 1 into intermediate 2 rather than minor 1 minor 2. I'm still unsure about that, but like I said, I will make my mind up about that eventually. It's not a big deal. 1 into 2, 1 into 2, we're in a free of some sort. So let's take a look at two possibilities we've got here. Let's bring up this first count. So here's an idea that we've just completed a pennant in wave 4. Exactly how to count this is not ideal. Okay, it does not count as a particularly pretty triangle. Now it doesn't have to be a triangle, but we get a very compressed D and E here, right? Because we can't swing back from that low to here to a lower low, so I have to push that out to be the C. This is the B, and you see how we end up very compressed. It's not a particularly convincing triangle. Not all pennants in technical analysis terms necessarily are Elliott wave triangles. It's just people are not drawing the lines correctly. They put lines around something and go, oh, it's a pennant. Well, if it was, it would be a triangle, and if it's a triangle, it should bloody look like one and it should count like one, and it's not at the moment, so it's more likely just a misinterpretation. People have seen it, thought it's a pennant, but it actually isn't. But if it looks like a duck and walks like a duck, maybe it is. You know, you just got to give it some benefit of the doubt. That's why it's one of my two possible counts I've got here. So if we've completed a 4 here, 1 2 1 2 1 2 1 2 3 4 3 4 3 4 3 4. Then we're now pushing up into that fifth wave. Now if we've got a pitchfork for that, it's not that the one. It's not the one I'm talking about. I think it's in the lower. So borrow that for the moment. So what I find interesting about this pitchfork here is we tracked very neatly along the 38.2, bouncing along, bump, 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 launch into the median line, back below the median line, back test the median line, down into the 38.2 region here, probably 23.6 if I put up the full pitchfork, and now pushing to the median line again where we're finding resistance. If we come off of log, this gets actually more poignant in a way, because the consolidation period in linear was right around the median line. High on the median line, high on the median line, high on the median line, lows, 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 lows. Push to the top of the pitchfork, 38.2, 38.2, 38.2 ascending. Ascending, higher lows, bump, 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 bish, bash, bosh, and then straight to the top of the pitchfork where we're finding resistance. So, it could be a real bit of a head fake. Possibly. It could be a little breakout of a pennant pattern, suck in some silly money, and then nosedive. Kind of hoping it is. Fingers crossed, you know, because I'm getting a bit sick and tired of hanging around up here. I'm bullish, I own Bitcoin, but I'm always chomping at the bit for a correction. So we'll see if we get it. But if we break out of this pitchfork, then essentially we're breaking out of the last ditch of a base channel, corrective channel, I think, since the prior lows of October to the first swing high. And one would expect a pullback to test support and then to really press on quite aggressively. So like I said, fingers crossed we'll get that pullback instead and another opportunity to buy it, but it could be go time. Like, could be possible. So let's switch off that count and we'll add that into it. Okay, the next thing I want to look at is this idea here. This idea is that it is a head fake and we're already going to pull back. Okay, we're not just going 3, 4, 5. Yes, you can say, well, wait a second, both are calling for a high. Yeah, but that first high, I will show you one more thing before we go, could press on to be an extended fifth and go even higher. Now, I don't know if that's the case, but assuming that we're topping out in one way or another, here's one way of doing it. A, 3 into B, and then we come down in 5 in the C. Maybe looking for the median line in a flat pattern, maybe looking a little bit deeper. That will give us our consolidation. A, B, C into 2, and then off we go into 3, and we get a nice pullback. We get an opportunity to buy a bit more. Okay, I want to see what happens around the top of this pitchfork. I want to see what happens if we do get that divergence, that bearish divergence as a pivot for a daily close. I want to see if that translates into further weakness. If all of that's the case, I feel that this is probably a better count. And this is not truly a pennant, it is actually a flat that's disguising itself as one, and it's going to come lower. So I'm probably leaning towards L at the moment. Maybe I'm just being greedy and I'm hoping against hope, but that is what I think is more technically probable at the moment. But we'll see. So now coming back to that idea that we're 3-4, how far could this fifth go? Well, the sky's the limit with crypto fifth waves. It's a minute wave degree, so maybe not that extreme, but it can still go pretty wild. Fifth waves can, and we haven't had the wildest of fifth waves yet. Here's a little weedy one back here. Here's another relatively weedy one here at the minor degree, so maybe we're due one. But we did get an incredibly extended third, so the only time a fifth can extend as well is when a third's extended, unless it's extending on its own. Now, it did not extend on its own because we've already had that big wave 3 extension, so how can we get around this problem? Well, what if it's not a pennant, like I've previously discussed? Let me just turn this off. And what if there's a diagonal in here? Like this. Okay. Now, if that's a diag, this itself could be 1, 2, 3, 4, 5 into 1, 2, and now this could be another 3 of a fifth. Now, at that point, this could extend quite aggressively. Right, now that could be the final wave degree of that 5. It could be extending even further, and the fifth of the fifth of the fifth could extend. Right, that's all complete guesswork. It's just a possibility. So I'm just going to leave it in there and say diag question mark. it will reveal itself, because either we will bump into that outer bound of that pitchfork and we'll weaken and we'll start to roll over, or we will violently break higher and continue to push, at which point we can come back and reassess. But for the meantime, I quite like the look of this, testing the top of that pitchfork, 38.2, 38.2, 38.2, ascending, like I said, into the pitchfork, into the median line. That looks like a really nice little head fake. Could also be a back test of the channel here. Okay, so we'll have to wait and see how this plays out, but for the meantime, I'm not calling it as a wave B yet. I want to see a pivot form here, I want to see weakness form here, I want to see it break down. If it breaks out and back tests and pushes higher, we'll reassess and come back probably in favour of a more bullish count of going up at least in that fifth wave. And yeah, so that's the bullish counts over the shorter term, bearish count over the shorter term. We've covered on the longer term. Essentially, okay, so getting up, this is going to have to get extended again. So we're going to bring that up to here. We're into and on our way through the target box at the moment. That we can always extend that, because 1 to 1 doesn't have to be the target. It could be 1618. It could be 123.6. It's getting a little longer, starting to look more bullish, but it could be anywhere in here. If that is a 3 into 4, as some people are suspecting, and it might be, then that could be 1, 2, 3, 4, 5 subwave, and the fifth is above us, similar to the bullish count. But this now becomes 5 waves up into a C of an X. A to here, B to here, C to here. At which point we will roll over violently, we will break all of the bullish trend, we will eventually come down so low that we will take out these lows, and that is an invalidation point for the bear bullish count. 1 into 2, we'll come down and we'll make new lows, and we'll move back below the October 22 low, October-November 22 low. That's the bearish count. Essentially, over the coming weeks, whether it's an ABC into a flat, or whether it's a diag into a 1, 2, 3, 4, 5, if we rebound out of a flat and go much higher, the bearish case is getting weaker and weaker with every single new high. These bulls are getting stronger and stronger. However, if things turn around violently, 1, 2, 3, 4, 5, consolidation, and we start to do something like this, then the bears have got a real case on their hands, which gets much stronger the deeper we come, and will probably take the place of primary count if we take out that low in September 23. Okay, that's everything I've got to say today, guys. I think we've updated Bitcoin pretty well. I tried to keep it somewhat brief, but I know I always fail to do that. So, like I said, all the best for 2024. I hope you have a wonderful 2024. That's not right. A wonderful 2024. All the prosperity for the new year, and I will be back with you as soon as I can. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you're interested in learning Elliott Wave and learning some technical analysis skills, you can always sign up to the Patreon. I do weekly live streams for my patrons, something which I don't do here on YouTube. I put out the occasional bit of extra content. I answer questions as and when I can. But you get access to my Elliott Wave trading, my Elliott Wave series, where you can go through a multitude of videos and learn all this stuff for yourself. So if that interests you, link in the description below. Take care of yourselves, guys, and I'll be back with you as soon as possible. All the best. Bye bye.